In this presentation, we will discuss the adoption credit. This will be a fairly long presentation. If you would like to jump to relevant topics within it, you can go to the description below where we will break out those relevant topics and have links so that you can jump directly to them within the presentation. Much of this information can be found in publication 17. You can find a link to this publication and other resources within the description below. In this presentation, we will take a look at the adoption credit. This information can be found in publication 17. Adoption credit. You may be able to take a tax credit up to $13,810 for qualified expenses paid to adopt an eligible child. The credit may be allowed for the adoption of a child with special needs even if you don't have any qualified expenses. If your modified adjusted gross income, AGI, is more than $207,140, your credit is reduced. If your modified AGI is $247,140 or more, you cannot take the credit. So there's going to be an AGI limitation, basically an income type limitation, fairly high, $207,140. Qualified adoption expenses. Qualified adoption expenses are reasonable and necessary expenses directly related to and whose principal purpose is for the legal adoption of an eligible child. These expenses include adoption fees, court costs, attorney fees, travel expenses including amounts spent for meals and lodging while away from home, and re-adoption expenses to adopt a foreign child. Non-qualified expenses, qualified adoption expenses don't include these expenses, so these are explicitly not included. That violate state or federal law, so obviously any expense that we have that violates a law wouldn't be something that can be used here for a credit. For carrying out any surrogate parenting arrangement, for the adoption of your spouse's child, so if it's the spouse's child, no, for which you received funds under any federal, state, or local program. So if we got the funds from the state program, then of course, if we received the funds and then paid the funds, it's not really an expense because we were basically in essence reimbursed or got the funds for them. Allowed as a credit or deduction under any other federal income tax rule. So basically they're saying you can't really double up on it and have a deduction or a credit and then another deduction or a credit. And paid or reimbursed by your employer or any other person or organization. So if the credit was reimbursed or if the expenses were reimbursed, then that wouldn't be something that you can have as an expense because it's not really an expense. It was reimbursed. It was paid and then the expense was given back in some type of reimbursement. Eligible child. The term eligible child means any individual under 18 years old or physically or mentally incapable of caring for himself or herself. So notice the or here, not the and here. So under 18 years old or physically or mentally incapable of caring for himself or herself. Child with special needs. An eligible child is a child with special needs if all three of the following apply. So there's going to be a defined term for the causes of or for related to this particular credit would be a child with special needs. 1, the child was a citizen or resident of the United States, including U.S. possessions at the time the adoption process began. 2, a state, including the District of Columbia, has determined that the child can't or shouldn't be returned to his or her parents' home. 3, the state has determined that the child won't be adopted unless assistance is provided to the adoptive parents. Factors used by states to make this determination include the child's ethnic background, B, the child's age, C, whether the child is a member of a minority or sibling group, and D, whether the child has a medical condition or physical, mental, or emotional handicap. The state must make a determination that a child has special needs before the child is considered to be a child with special needs. A child having a special factor or condition isn't enough to establish that the state has made a determination of special needs. When to take the credit. Generally, until the adoption becomes final, you take the credit in the year after your qualified expenses were paid or incurred. If the adoption becomes final, you take the credit in the year your expenses were paid or incurred. See the instructions Form 8839 for more specific information on when to take the tax credit. Here's a quick look at Form 8839, which is the qualified adoption expenses. So you can see through here, we'll get back to this in future presentations, but here's a quick look at the form for now. Back to the text. Foreign child. If the child isn't a U.S. citizen or resident at the time the adoption process began, you can't take the credit unless the adoption becomes final. You treat all adoption expenses paid or incurred in years before the adoption becomes final as paid or incurred in the year it becomes final. So in the year it becomes final, obviously we may not have made the payments at that point in time, but that's when we're going to take the credit. So even though the payments possibly could have been made in the prior year, once it becomes final, that's the point in time that we take those expenses. So it's not necessarily on a cash basis in that case. It's basically when the process is finished, then we can have all the payments that were made. And you can see logistically why that might be the case, because obviously we don't have all the information to claim the credit normally until the thing is done and the process is over. And then we'll have the correct paperwork. We'll have the correct number for the child, social security number, or whatever type of identification number that is needed. And so that's why, just from a logistical standpoint, it might be easier. And therefore, the reason the code might be saying that we take the credit at the point in time that the process is completed generally. How to take the credit. Figure your 2018 non-refundable credit and any carry forward to 2019 on Form 8839 and attach it to your Form 1040. So obviously, once again, we have this being our form. This is the Form 8839, which of course then would be attached to the Form 1040. Include the credit in your total for Schedule 3, Form 1040, line 54. So that's going to be kind of a new schedule for this year, 2018, Schedule 3, and you'll see 54 other credits from Form. And we'd obviously put Form 8839 and choose the selection C here for that item. Check box C and enter 8839 on the line next to that box. More information. For more information, see the instructions for Form 8839, as we will see in future presentations. In this presentation, we will discuss what's new with the adoption credit. This information from 2018 instructions for Form 8839. What's new? 2018 maximum credit. The maximum credit and the exclusion for employer-provided benefits are both $13,810 per eligible child in 2018. The amount begins to phase out if you have modified adjusted gross income, AGI, basically an income limitation in excess of $207,140, and it's completely phased out for modified adjusted gross income of $247,140. So remember, the adjusted gross income is going to be the number on the 1040. It's going to be at line 7. It's going to have modified adjusted gross income. So you're going to want to think about first, basically, what's the income we have? What's the adjusted gross income? The adjusted gross income is affected by things on Schedule 1, which includes adjustments to income. And then there's some modifications when they say modified adjusted gross income to it as well. And we'll get into some more detail about what the modified adjusted gross income, but in essence, for general purposes, you can think of it as, of course, some type of income limitation. As the income goes up over that 207,140, then there could be a reduction to the credit, and then when it caps out at 247,140, the modified AGI, then that has phased out. The credit has phased out at that point. In this presentation, we will discuss the purpose of the Form 8839 related to the adoption credit. This information can be found in the instructions 2018 for Form 8839. Purpose of the form. Use Form 8839 to figure your adoption credit and any employer-provided adoption benefits you can exclude from your income. you can claim both the exclusion and the credit for expenses of adopting an eligible child. For example, depending on the cost of the adoption, you may be able to exclude up to $13,810 from your income and also be able to claim a credit up to $13,810. But you cannot claim both the credit and exclusion for the same expenses. So note that we have both the exclusion from income, which of course would lower the taxable income, resulting in a less tax, and then the credit, which is a dollar for dollar cash back, but you can't use the same expenses, basically the same expenses for the calculation of both the exclusion and the credit. We'll go into some more detail in this as we go. See qualified adoption expenses and employer-provided adoption benefits later. Adoption credit. Use Form 8839 Part 2 to figure the adoption credit you can take on Schedule 3, line 54. A quick look at the form. Here's Form 8839, Qualified Adoption Expenses. We're looking at Part 2, the adoption credit. Back to the text. Check box C on that line and enter 8839 in the space next to box C. You may be able to take this credit in 2018 if any of the following statements are true. So they're basically saying that we're going to take this information, we're then going to go up to the Schedule 3, and we'll go into the line 54. We're going to select box C and put the related number of the form. That number then is going to be carried to the Form 1040, and it will be included in the credits as we calculate the bottom line number on the 1040. Back to the text. You may be able to take this credit in 2018 if any of the following statements are true. 1. You paid qualified adoption expenses in connection with the adoption of an eligible U.S. child, including any expenses paid in connection with adopting an eligible U.S. child with special needs in A. 2017 and the adoption wasn't final until the end of 2017, or 2018 and the adoption became final in or before 2018. 2. So note that we have 2017, but the adoption didn't become final until the end of 2017, which means if that's the case, then you may not have been able to take the adoption in 2017, and therefore may be able to take it in 2018. B then saying 2018 the adoption became final in or before 2018. So if the adoption became final within 2018, then you would think that would be, of course, the time to take the credit at that point in time, because we have everything we need in order to do so. Number 2, you adopted an eligible U.S. child with special needs and the adoption became final in 2018. In this case, you may be able to take the credit even if you didn't pay any qualified adoption expenses. Number 3, you paid qualified adoption expenses in connection with the adoption of an eligible foreign child in A. 2018 or prior years and the adoption became final in 2018. So note the key point here is usually when it becomes final, when everything becomes final, that would be the point in time we'd have it. B. 2018, the adoption became final before 2018. Number 4, you have a carry forward of an adoption credit from 2017. So we have a carry forward of the credit from 2017. Income exclusion for employer-provided adoption benefits. Use Form 8839 Part 3 to figure the employer-provided adoption benefits you can exclude from your income on Form 1040 Line 1 or Form 1040 NR Line 8. So once again, if we go back to our form, we're looking at Part 3. On Form 8839, Qualified Adoption Expenses, here is Part 2 for the credit. Part 3 is going to be on page 2, Employer-Provided Adoption Benefits. Now, if they're employer-provided, they may be excluded from the income. And if that's the case, it'll probably be in Box 1 or indicated on the W-2, and therefore not to be included in the W-2 income as we process the tax return in Line 1. If it's not included in this Line 1 income, then it's not going to be taxable income and it won't be generating a tax. So that's basically how the benefit there would be taken or used. Back to the text. You may be able to exclude these benefits from income If your employer had a written qualified adoption assistance program, see employer provided adoption benefits later, and any of the following statements are true. 1. You received employer provided adoption benefits in 2018. However, special rules apply for benefits received in connection with the adoption of an eligible foreign child. See column C later. Number 2. You adopted an eligible U.S. child with special needs and the adoption became final in 2018. Number 3, you received employer-provided adoption benefits in connection with the adoption of an eligible foreign child in A, 2018 or prior years and the adoption became final in 2018, or B, 2018, the adoption became final before 2018. See column E later. For purposes of calculating the adoption credit in Part 2, qualified adoption expenses didn't include expenses reimbursed by an employer under the written qualified adoption assistance program, see employer-provided adoption benefits. For this reason, you must complete Form 8839 Part 3 before you can figure the credit, if any, in Part 2. So if in this case, then they're basically saying you got to do Part 3 so that you are able to properly complete Part 2 of the form. So Part 3 related to the employee benefits, Part 2 related to the credits. So remember, if we go back to our Form 8839, Part 2 is the credit, and Part 3 is the employer-provided adoption benefits. So generally then, if we have employer-provided adoption benefits, we need to fill out Part 3 so that we can then fill out the adoption credits in Part 2 in some cases. Caution, you can't exclude employer-provided adoption benefits in your employer if your employer is an S corporation in which you own more than 2% of the stock or stock with more than 2% of the voting power. So in the case where you're an S corporation, a flow-through type of business, owning more than 2%, which is often the case in many S corporations, but like small business type corporations, then be careful with the caution here in terms of you can't exclude employer-provided adoption benefits if your employer is an S corporation in which you own more than 2% of the stock. Income limit. The income limit on an adoption credit or exclusion is based on modified adjusted gross income. Again, they have that M, modified adjusted gross income. Adjusted gross income, remember, is the amount that we find on the 1040 line 7. So the 1040 line 7 is the adjusted gross income, basically the income level, but it is adjusted for a few things that are typically on Schedule 1. So that's going to be line 7 here. Then there's going to be some modification specific. What that means, whenever you see that, it means it's going to be specific to this code section. So we'll have to see what those specific modifications will be. We'll go into them more later. For 2018, use the following table to see if the income limit will affect your credit or exclusion. If your modified adjusted gross income is 207, 140 or less, you won't affect the credit or exclusion. Then the income limit won't affect the credit or exclusion. So if basically your modified adjusted gross income, your income is, for these purposes, we'll say if your income is lower than 207, 140, then you're good. You shouldn't have a problem. If the income is between 207, 141 and 247, 139, again, modified adjusted gross income, but in essence, an income limitation, then it will reduce your credit or exclusion. We're not talking about how much it will reduce it yet, but notice if you're in this range, it'll probably be reduced in some point according to the calculation. If you have 247, 140 or more, will eliminate the credit or exclusion. So if you're over this point on the modified adjusted gross income, then the credit won't apply due to the income limitation. In this presentation, we will discuss definitions related to the adoption credit. Information can be found 2018 Instruction 4 Form 8839. Definition: eligible child. An eligible child is any child under age 18. If the child turned 18 during the year, the child is an eligible child for the part of the year he or she was under age 18. Any disabled individual, physically or mentally unable to take care of himself or herself. Qualified adoption expenses. Qualified adoption expenses are reasonable and necessary expenses directly related to and for the principal purpose of the legal adoption of an eligible child. Qualified adoption expenses include the adoption fees, the attorney fees, the court costs, travel expenses including meals and lodging while away from home, and readoption expenses related to the adoption of a foreign child. Qualified adoption expenses do not include, so these are going to be expenses that are specifically not included, expenses for which you received funds under any state, local, or federal program that violate state or federal law, for carrying out a surrogate parenting arrangement for the adoption of your spouse's child, reimbursed by your employer or otherwise, or allowed as a credit or deduction under any other provision of federal income tax law. So in essence, obviously, if we got reimbursed for the expenses in some way or it was paid for in some other way, then of course we can't take the expenses. If it was used in some other format, meaning we had this expense for a deduction or some other type of credit, then typically we wouldn't be able to use it twice, to take the credit twice. And obviously we could violate if the expenses were in violation of any kind of law or something like that, then that would be an instance in which the expense wouldn't typically be included. And you can, in this presentation, we will discuss employer-provided adoption benefits. Information can be found in the 2018 instructions for Form 8839. Employer-provided adoption benefits. In most cases, employer-provided adoption benefits are amounts your employer paid directly to either you or a third party for qualified adoption expenses under a qualified adoption assistance program. So we can imagine the situation where our employer would either be paying us directly or the third party, but it would have to be under the qualified adoption expenses program, and therefore being under the qualified adoption expenses program would possibly provide us with some benefits in some cases. A qualified adoption assistance program is a separate written plan set up by the employer to provide adoption assistance to its employees. For details, we can see publication 15B. So if this is something you want to look into to have a qualified adoption assistance program as an employer, or if this is something you want to have questions about, publication 15B, take a look at irs.gov, pub 15B. Employer-provided adoption benefits should be shown in box 12 of your Form W-2 with code T. Your salary may be reduced to pay for these benefits. You also may be able to include amounts not shown in box 12 of your Form W-2 if all the following apply. So generally it's going to be on the W-2, of course the W-2 reporting our income from the employer at the end of the year, box 12, and then we'd have code section T. This is an example of a data input screen in tax software, and typically we would have $45,000 from box 1. That's going to be reported on the tax return. And then if we go to box 12, we could find that amount in that says T in box 12, and that would be the adoption benefits. If we say $5,000, we have $45,000 in box 1, and then $5,000 in box 12 with that T next to it. Then if we go to the forms, you'll note that in box 1, under the way just we input it here, it's got the $45,000 in box 1. Now the $45,000 is what the tax is generally going to be calculated on. It may be the case that the $5,000 was received over and above and not included in the gross pay of the $45,000. And in that case, if that's the case, that's going to be an easy way to record this for the employee, because obviously then we just have to take the W-2 and we can easily just record this, and we've already reduced, basically we got kind of, you can think of it kind of like a deduction, but it's basically reducing the income before we even report it. So it's not like we report income and then a deduction. It would, in that case, if that were the case, already be pulled out of the income as we report the income on the tax return, and therefore lower the amount of income that in essence will be taxed on at that point. So that format is going to be one of the easier ways to basically process the return and record this information, because it will be done hopefully on the employer side fairly easily with a code that anybody can basically put into the system fairly quickly. And that's why the program for the employer, benefit program for the employer to pay the adoption credits can be beneficial to the employee in multiple different ways, but it can make things easier as well. Back to the text. You also may be able to exclude amounts not shown in box 12 of your Form W-2 if all the following apply. First item, you adopt a child with special needs. Second item, the adoption became final in 2018. Last item, your employer had a written qualified adoption assistance program as described earlier. The following examples help illustrate how qualified adoption expenses and employer-provided adoption benefits applied to the maximum adoption credit allowed. So let's take a look at some examples. Madeline paid $10,000 in qualified adoption expenses for the adoption of an eligible child. Under the Qualified Adoption Assistance Program, Madeline's employer reimbursed her for $4,000 of those expenses. Madeline may exclude $4,000 reimbursements from her income. So the $4,000 that was reimbursed are going to basically be excluded from the income because she got reimbursed for them. However, because the employer reimbursed the $4,000 of her expenses no longer meet the definition of qualified adoption expenses. As a result, Madeline's maximum adoption credit is limited to $6,000. So in other words, she paid the $10,000, but she got kind of paid back by her employer, but was reimbursed for the $4,000. And therefore, in calculating the credit, we don't get to take the full $10,000. We've got to reduce it by the $4,000. But of course, there's a benefit to that because obviously they got reimbursed. So the $4,000 was reimbursed. Not only that, but the reimbursement from the employer may not be included in income. So that means the employer basically paid the employee $4,000 by reimbursing these expenses. And it's not something that the employee would have to include in income, which typically they would if it was any other or most other type of item, such as a payment to them or a payment for some other thing. And therefore, the $4,000 has been received back, isn't included in income, but also, of course, it can't be included in the calculation for the credit calculation. Here's a test 1040. We have the single individual head of household, and we're going to go through a similar type of scenario. So we're going to say Adam Smith, relationship, we have an adopted child. We're going to say that the income was $96,000. So we're going to say, hey, it was $100,000, and then there was $4,000 that was reimbursed expenses. So we'll say reimbursed adoption expenses with a qualified adoption assistance program. And when we enter that into the data input, we're going to say, all right, in the data input screen, we've got the $96,000 in box 1. We're going to imagine that on the W-2. And then on the W-2 in box 12, we have this T adoption benefits, and that's going to be the $4,000. So we're imagining the $100,000 would be the income total, but then we had $4,000 that was given for a qualified adoption expenses program directly to whoever the payment went to or to us as some type of reimbursement, and therefore is not being included, we're going to say here, in box 1. So if we go back up to our forms then, we're going to say, all right, here is the 1040. The 1040 is going to have the $96,000 rather than the $100,000, reducing it by the $4,000 that the employer provided as the benefit. Remember, we paid $10,000, but we got, in essence, basically reimbursed of the $4,000 for the adoption costs. And that means that although our income was $100,000, we're going to say it was reduced down by that $4,000 to the $96,000 due to that payment. Then if we go to the qualified adoption, and that of course lowers the amount of tax that will be calculated. And then if we go to the qualified adoption expenses, Form 8839, we're going to scroll down and say in part 2, the maximum adoption would be the $13,810. So that $13,810 would be the maximum. Of course, we only paid the $10,000, and then it got reduced by the $4,000 to basically $6,000. So in line 5, we got the qualified adoption expenses is only the $6,000, although we paid the $10,000. That's the major key point that we're looking at here. That basically flows through. We'll discuss a little bit more of the form components in future presentation. If we go to the second page, we have part 3, employer provided adoption benefits, where we had the $13,810 is the maximum amount of exclusion that could be had. And then we had the $4,000 of the amount that was excluded. Line 20 says that the employer provided adoption benefits you received in 2018. This amount should be shown in box 12 of your 2018 W-2 with the code section T in it. And you can see basically what it's doing here. It's changing the adjusted gross income. So you'll note that our adjusted gross income on the 1040 is now going to be starting at the 96 in this case because it was reduced. If we go back to the 8839 page 2, the modified adjusted gross income is going to add that 4,000 back in to what really our payment was because we received 100,000, including that benefit for the reimbursement of the adoption expenses. And then we could see that basically flowing through to the rest of this here. And that is what is going to limit the amount of payment that we can include up top to 6,000 rather than the 10,000 as we calculate the credit. The credit that is calculated then flows through to the Schedule 3. We see it on C on line 54, and we're going to put 8839 as the form, 6,000. That then is going to flow through to the 1040. So if we scroll down through the 1040, then it's going to be included here in box 12. So we have the box 12, we have the 2,000 child tax credit. We're not concentrating on that here. And then the 8,000, which of course includes the 6,000 we just took a look at. Example 2. Haley paid $20,000 in qualified adoption expenses for the adoption of an eligible child, including $8,000 of legal fees. Under the Qualified Additional Assistance Program, Haley's employer reimbursed the $8,000 of legal fees. Haley may exclude $8,000 employer reimbursed from her income. However, because of the employer reimbursement, $8,000 of Haley's expenses no longer meet the definition of qualified adoption expenses. As a result, Haley's maximum adoption credit is limited to $12,000, which is the $20,000 minus the $8,000. So we'll imagine a similar scenario in our test 1040. We're going to say head of household filing status. We're going to keep the name Adam Smith here. We got the one dependent adopted child. We're going to say, if we scroll down, we're going to say now there's 92,000. We're going to say that the 100,000 would have been the income, reimbursed 8,000 of it, and therefore we're down to the 92,000, which of course would lower the amount of the tax because the taxable income would be lower. We're going to imagine then our W-2 income would be much the same, where we have the 92 reported in box 1, 12 showing that T for the adoption benefits, which now is going to be the 8,000. And then if we go to our form for the 8839, we can see that on Part 3, we had the 13,810, which is the maximum exclusion allowed. We're going to say that 8,000 of it was reported on W-2 code section T, which brings our income up to the 100,000. So now they're going to say our modified adjusted gross income is the 100,000, including the amount that was given, even though it was not included in the taxable amount on the 1040 line 1. And that means that if we go to the part 2, then here's part 1. Part 2, we have the maximum adoption credit per child, the 13,810, and we're going to say that 20,000 was paid, but it's now limited to 12,000 that we should be able to include here because the 8,000 was reimbursed, and that would be what we can use to record the credit. Note that it's also being restricted. It's being restricted here to only 10,234. How is that the case? In essence, if we go back to the 1040, we're looking for that 10,234, which is going to be right here. And so in essence, this type of credit can't take the amount that we're going to receive below zero. They can't take the liability below zero. So it's going to be at one of the credits that are going to be included in line 12, which generally can only take us down to zero. And it's not included in something that we have the credits in line 17, which we call refundable credits, which could actually take us below that point. So the credit is large enough in this case, basically to take the liability, the tax liability down to, in essence, zero. And it's not going to be able to generate a refund or money to the taxpayer beyond that, having no liability and then paying money to the taxpayer. Back to the text. Example 3. The facts are the same as example 2, except that instead of reimbursing Haley for her legal fees, the employer directly paid the $8,000 to the law firm. The employer's payment to the legal fees produced the same result as the employer's reimbursement of the legal fees in example 2, $8,000 exclusion and $12,000 credit. So this is basically just emphasizing that it doesn't really matter as long as you have the qualified plan. If the full $20,000 was paid by the employee and then they got reimbursed from the employer directly to the employee of the $8,000, then that would similarly work as if the employer paid directly the $8,000 to the legal firm, the third party. In essence, you can see it all kind of washes out in the same kind of way, but sometimes, of course, sometimes things are set up so that the plan has to actually pay the employer. You can see why that would be the case, because then the IRS can kind of follow the paper trail possibly more easily. But in this case, they could reimburse the fees, or the fees could be paid directly to the third party. Next example. Paul paid $30,000 in qualified adoption expenses to adopt an eligible foreign child, and the adoption became final in 2018. Under a qualified adoption assistance program, Paul's employer reimbursed him $13,810 of those expenses. Paul may exclude $13,810 reimbursement from his income. The remaining $16,190 of expenses, $30,000 minus the reimbursement, $13,810, continue to be qualified adoption expenses that are eligible for the credit. However, Paul's credit is dollar limited to $13,810. The remaining $2,380 may never be claimed as a credit or excluded from gross income. So note here, we're having basically this situation where the cap was hit, right? So if there's $30,000 that was paid, which is quite possible, and then the reimbursement was the $13,810, then that's great. That's going to be excluded, and that brings the amount of payment down to $16,190. But that $16,190 is greater than the maximum credit that can be taken. So, and that means that there's a loss basically of some expenses that were paid. Part of that $30,000 is not being now deducted or not being reduced of the income, and is not being allowed as the credit. And then the question is, well, can we roll it forward till the next year and maybe take the credit in 2019? And they're saying here that it may never be claimed as a credit or exclusion from gross income. So no is the answer basically they're giving. Let's see if we can take a look at a similar scenario here. So we've got the single or the head of household filer. We've got the one dependent. We're going to say it's the adopted child here. And we're going to say that they earned $150,000, but the maximum was taken out, which was the $13,810, and therefore box 1 showing $136,190, reduced by the amount that's being taken out for the adoption expenses by the employer, which is the $13,810. If we take a look at the data input screen, you can imagine the W-2 then showing this in box 1, and then in box 12 having this T indicating adoption benefits of the $13,810. So in that case, we're going to say then that if we go down to the 8839 and look at the second page, we would say the employer provided adoption. The max could be $13,810, and that's what was provided, $13,810. That brings the modified AG up to $150. This is what the actual AGI was, because they got basically in essence paid $13,810 as a reimbursement or as payment for the adoption expenses. And therefore, when we go to page 1, the amount that we can claim as the adoption expenses is the $16,190, but the maximum is $13,810. So it's over the maximum. We can't go over that amount. So now we're going to say, all right, now it hit the cap, and therefore the amount of the credit is capped out at $13,810. So we've got some major caps here. One is obviously going to be the caps on the amount of the $13,810. Also, we saw last time that we have the cap with the limitation on the liability. This is not something that we can get a refund for if there's no liability for. So now that $13,810 rather than the $16,190 is what we're going to have as the credit, and the difference between those two. So remember, we paid $30,000, and then we're going to say we got reimbursed $13,810. That reimbursement from the employer means that we don't have to include that amount in our taxable income, so it reduced our tax, so that's good. And then we're going to say we also got a credit of $13,810, so we got that back, which leaves $2,380 of the $30,000 that we originally paid, which we don't get a benefit for. And you might ask, well, can we carry that forward till the next year, 2019, and maybe get the credit in that year? And the answer is basically saying no. Generally, we can't generally do the carry forward. So if we go to Schedule 3, then we see there's that $13,810 other credits, Form 8839. That then flows forward to the 1040 on the 1040, we'll see it included in box 12. Note that because the income is high, they earn a lot of money here, then we're still over the liability and so still have a tax liability even after the credit. If the income was low, then we could have a restriction due to our liability as well. So it's something to keep in mind. In this presentation, we will discuss who can take the adoption credit or exclude employer-provided adoption benefits. This information can be found in Instructions for Form 8839, 2018. Who can take the adoption credit or exclude employer-provided adoption benefits? You may be able to take the credit or exclusion if all three of the following statements are true. All three must be true. Number 1, your filing status is single, head of household, qualifying widow, widower, or married filing joint. Note what they excluded there, of course, is married filing separate. And again, like many credits, the IRS is skeptical if we have a married couple that files married filing credit separate and then has some credits to take. So note that when married, then typically the general rule is you can only file married filing joint or married filing separate, and married filing separate often has many limitations with regards to things like credits, because the IRS is skeptical of people reporting as married filing separate just to basically kind of manipulate the way the credits would work. So keep that in mind. Back to the text. Generally, if you are married, you must file a joint return to take the credit or exclusion. However, if you are married and aren't filing jointly, you may be able to take the credit or exclusion on your own return if you are considered unmarried because you are legally separated or living apart from your spouse and you meet certain other requirements. So if there's some kind of unusual circumstance where you think you're married but may still be able to report separately and qualify, then you can look further into that here. And you can see married persons not filing jointly. Number 2, your modified adjusted gross income. So remember, the adjusted gross income we see on line 7, and we saw the modified adjusted gross income as something that will be modified, and we could see that on Form 8839, and the calculation of it, you can see it, part of that at least, on the Part 3 in this form. So the adjusted gross income in this case, modified adjusted gross income, $150,000, as opposed to the 1040 on line 7, $136,190. Major adjustment there being the amount that was paid, or the amount reported on the W-2. So let's go back here. The amount reported on the W-2 with the code section T. So the employer provided adoption benefits that would basically be paid by the employer to you or directly to the third party is generally what is bringing that amount to be modified. So that's going to be the modified AGI. Back to the text, or you have a carry forward of an adoption credit from 2017 to figure your modified AGI. See line 7 for credits or line 23 for exclusions. Number 3, you report the required information about the eligible child in Part 1. Married persons not filing jointly, you may be able to take the credit or exclusion if all of the following apply. So all must apply. Statements 2, and 3 under who can take the adoption credit or exclude employer-provided adoption benefits are true, and you lived apart from your spouse during the last 6 months of 2018. The eligible child lived in your home more than half of 2018. You provided over half the cost of keeping up your home. Additionally, a person who is filing separately may claim an adoption credit carry forward from a prior year or years, provided that if the person was married in the year in which the qualified adoption expenses first became allowable for the credit, the person filed a joint return for that year. In this presentation, we will discuss when to take the credit or exclusion related to the adoption credit. This information found on the Instructions for Form 8839, 2018. When to take the credit or exclusion. When you can take the adoption credit or exclusion depends on whether the eligible child is a citizen or resident of the United States, including U.S. possessions at the time the adoption effort began. Domestic adoption. Child who is a U.S. citizen or resident, U.S. child. If the eligible child is a U.S. citizen or resident, you can take the adoption credit or exclusion even if the adoption never became final. take the credit or exclusion as shown in the following table. Here is the domestic adoption table. If you pay qualifying expenses in any year before the year the adoption became final, then take the credit in the year after the year of the payment. If you pay qualifying expenses in, now we're on the second one, the year the adoption became final, then take the credit in the year the adoption became final. And then if you pay qualifying expenses in, we're on the third one, any year after the year the adoption became final, then take the credit in the year of the payment. And then if your employer pays for qualifying expenses under Adoption Assistance Program in any year, then take the exclusion in the year of the payment. So we'll note that it generally comes down to when the payment was made and when the finalization happened. So if we start off here once again to go through these one more time, any year before the year the adoption became final, then we take the credit the year after the year of the payment. In other words, we made the payment. If we're saying we made the payment this year and it's going to become final then next year, then because it wasn't final, then typically even though we made the payment this year, we'll take the credit next year according to the table. Next item, the year the adoption becomes final. If we made the payment in the year the adoption became final, then we would take the credit in that same year because we both made the payment and it became final typically. And then any year after the year the adoption becomes final. So what if we had qualified, what if it became final and we still made payments later on after the year, like we're paying the lawyer later on after the finalization had been happened? Well, then we have to do it in the year of the payment. So that in that case, it's more of a cash basis system. So if it became final first and then we made the payment, then we'd have to still have it in the year the payment was made. So note, in the typical situation, we would think of that we're making payments and then it becomes final, and then at the point in time it becomes final, that's the point that oftentimes we would be able to take all the expenses that we paid. In the case that we had payments that we made after the adoption had been final, then we're on more of a cash basis system, and we would need to then take the credit in the date that the payments were made. Back to the text. Child with special needs. If you adopt a U.S. child with special needs, you may be able to exclude up to $13,810 and claim the credit for additional expenses up to $13,810 minus any qualified adoption expenses claimed for the same child in a prior year. The exclusion may be available even if you or your employer didn't pay any qualified adoption expenses, provided the employer has a written qualified adoption assistance program. See column D for more information. Foreign child. If the eligible child is a foreign child, you can't take the adoption credit or exclusion unless the adoption becomes final. A child is a foreign child if he or she wasn't a citizen or resident of the United States, including U.S. possessions, at the time the adoption effort began. Take the credit or exclusion as shown in the following table. Similar table now, but now we're looking at foreign adoption. So we have a similar situation if you pay qualifying expenses in, and then we have the second item, then take the credit in. So we're going to start off here. If you pay qualifying expenses in any year before the year the adoption becomes final, then take the credit in the year the adoption becomes final. And then if you pay qualifying expenses in the year the adoption becomes final, then take the credit in the year the adoption becomes final. And then if you pay qualifying expenses in any year after the year the adoption becomes final, then take the credit in the year of the payment. So we have similar rules there. Next item, if your employer pays for the qualifying expenses under the Adoption Assistance Program in any year before the year the adoption became final, then take the exclusion in the year the adoption became final. And then if your employer pays for qualified expenses under the Adoption Assistance Program in the year the adoption becomes final, then take the exclusion in the year the adoption becomes final. And then if your employer pays for qualified expenses under an Adoption Assistance Program in any year after the year the adoption becomes final, then take the exclusion in the year of the payment. So you can see and you can compare and contrast basically these two tables, the domestic adoption situation versus the foreign adoption situation. Back to the text. For more information, see column E. To find out when a foreign adoption is treated as final, see Rev Procedure 200531, 200526. So you can look at the IRS website, irs.gov, to find that information. Here's links that you can try to look at as well. Back to the text. If your employer makes adoption assistance payments in a year before the adoption of a foreign child is final, you must include the payments in your income in the year of the payment. Then, on your return for the year the adoption becomes final, you can make the adjustment to take the exclusion. So note, in that situation, if we can't take the exclusion, but the payment was made in that year, then basically it's got to be included in income, is what they're saying, in the year when normally you would think it would be not included in income. That's going to be the normal procedure. But if we don't get the exclusion until the following year, then we would have to include it in the income of that year, pay taxes on it then, most likely. And then on your return for the year the adoption becomes final, you can make the adjustment to take the exclusion. So then we can take the exclusion when the payment becomes final. It's a little bit unusual situation. So caution. Your employer isn't required to withhold income tax on payments for qualified expenses under the Adoption Assistance Program. So note that if you're in this kind of funny situation where there's a payment for the Adoption Assistance Program, usually would be reducing the taxable income, and therefore you wouldn't be calculating withholdings on it. But in the case where you're not going to get the credit in that year, then you may have your withholdings, they're saying it might be a little low, because they're not including it in income. So you want to watch out for that in that special kind of instance. Back to the text. If you must include the payments in income in the year paid because your adoption of a foreign child isn't final, your withholdings may not be enough to cover the tax of those payments. You may need to give your employer a new form, W-4. So the W-4 form will, of course, kind of change the amount of withholdings you have. So you might need to adjust the W-4 to increase the number of withholdings, because it will be thrown off by the fact that now we have the adoption stuff in there that's going to be included in income for, we'll have to report it as income, but it's not being included for the withholding calculation. So back to the text. Form W-4 to adjust for withholdings or make estimated tax payments to avoid a penalty for underpayment of estimated tax.